Hello and welcome to my channel. I am Ben. My channel is called Uncle Starts FIRE because I only started my FIRE, or financial independence retire early journey from 40-year-old, and that was like 5 years ago. I want to show you, especially the uncles and aunties, that no one is too old for FIRE, and it's never too late to start investing. With the right strategies, you can achieve your financial goals, even if you are starting in your 40s. To elaborate a bit on my investments, they consist of: number 1, the dividends portfolio, which is the biggest. Number 2, the diversified growth portfolio, which is also important for achieving FIRE. And number 3, a very small opportunistic portfolio. FIRE is for everyone, not just for millennials. I started the channel because I love the concept of FIRE, and want to record my journey of achieving FIRE. The other reason why I started the channel is because I find that many people of my age have either not given thought to FIRE, or think that FIRE is something that only young people can do. That is, our time is already over. Cannot achieve FIRE already. I don't blame the uncles and aunties for thinking this way. Whenever I search about FIRE on YouTube or Google, I will see young people in their 20s, talking about how they plan to achieve financial independence by their 30s. So the uncles and aunties will say we are already in our 40s lay. So this is not our thing la. But I believe that FIRE is definitely applicable to people in their 30s and 40s, or even 50s. Firstly, we have so many years to go before the government official retirement age of 65. Secondly, achieving financial independence means having less worries about expenses, and the dividends and returns from the investments can pay for things like utilities, mortgage, insurance and more. These benefits of FIRE are also applicable to us. Thirdly, when the dividends and returns from the investments can pay for all our expenses, we can even retire earlier. I know retiring at 50s is not exactly retiring in our 30s, like what the millennials are saying. But achieving FIRE at 50s still mean an additional 10 to 15 years of relaxation in our shorts, at the kopitiam, to la copy and chit chat with friends, rather than working hard in the office, right? In addition, uncles and aunties have an advantage. Most of us have worked for a while, and would have some savings already. We will have greater discipline in sticking to regular investment plans, since we have more resources. And so, we can take advantage of market downturns for more dollar cost averaging of our investments by drawing down on our savings. Everyone should have their own target investment returns based on their expenses. I aim to retire earlier with at least $1.5 million investment portfolio, with passive income of $6,250 a month to fund all my expenses. This may change along the way, but that's my current plan. Uncle Ben is an introvert, and is camera shy. I have no celebrity bone la. So my videos use a text-to-speech software to deliver my content. This allows me to focus on delivering higher quality information without the distractions of being on camera. So when you hear an "ma" or Caucasian slang, haha, I don't actually sound like that. But I assure you that everything shared in my videos is definitely 100% based on my real portfolio. Or 100% skin in the game. Sounds pro whore. Uncle pretending to sound professional only. Investment philosophy. It is this uncle's investment philosophy that no one is smart enough to know exactly which shares will do very well in the short term, or the share prices have hit a bottom. Maybe someone is, but definitely not this uncle. I focus on finding companies with strong, stable business model, are market leaders in their sectors, and with long-term growth potential. I buy many of such companies from different sectors and countries in my portfolio, and I buy them over time. So Uncle aims to diversify over companies, sectors, countries, and then over time. Types of investment. It is this uncle's investment philosophy that both dividend shares, and also growth shares, have important roles to play in an investment portfolio. In order to be able to meet my objective of retiring early, I believe a diversified portfolio is the key to long-term success in investments. I will share the 3 components of my investment portfolio, and what I do with them. First, dividend shares. Quality dividend shares ensure a steady income stream, and are the core pillar of my investment portfolio. To understand the shares that I invest in, I will try to read as much as I can, such as the quarterly updates. I will try to attend as many annual general meetings or AGMs as possible, and I will try to visit the places where the business is done to get a feel of how resilient they are. For example, I visit shopping centers owned by Capital Land Integrated Commercial Trust, and I observe how much gardenia bread is left over on the shelves at supermarket, compared to the other brands, to see whether QAF Limited is retaining its market share. If the dividend shares are of high quality, the riskiness of your investments should be relatively low. To further manage the risk of buying individual dividend shares, I keep my portfolio to around 40 dividend shares, and a maximum cap to the amount I can invest for each share, no matter how much I like it. The maximum amount I can invest in a share is 3% of my investment portfolio. So if I have invested a total of $500,000, then each share cannot be more than $15,000. My target allocation to dividend shares in my portfolio is about 60%. While dividend shares are the pillar of my investments, they should be balanced with growth shares for building long-term wealth. Some people, including myself, feel that growth shares may be riskier, and may be more reluctant to invest in them. Among my friends in their 30s and 40s, I found that many just focus on dividend shares. As a result, we may miss out on the potential for steady substantial capital appreciation in the long term. To manage the risk of growth shares, a large portion of my growth portfolio are invested in globally diversified exchange-traded funds, or ETFs, with exposures across geographies and sectors to help to lower the overall risk. The more straightforward ETFs are SPY, which invests in the S&P 500 index, and the V.W.R.D., which invests in the shares from all over the world. These ETFs invest in the underlying shares based on the market capitalization of the shares. For example, since Apple Inc. is the world's largest capitalization company, it has the largest weight in the V.W.R.D., accounting for about 3.5% of the ETF. Even Warren Buffett advocates buying ETFs.
Nature of index funds is that you are saying, I think America's business is going to do reasonably well over a long period of time, but I don't know enough to pick the winners and I don't know enough to pick the winning times. There's nothing wrong with that. I don't know enough to pick the winning times. Occasionally I think I know enough to pick a winner, but not very often. And I certainly can't pick winners by going down through the whole list and saying this is a winner and this isn't, and so on. So the important thing to do, if you have an overall feeling that business is a reasonable place to have your money over a long period of time, is to invest over a long period of time and not make any bet implicitly by putting a big chunk in at a given time.
While these ETFs form the basis of my investments, I find that most of them are overweight in the technology sector. This is because the tech shares have outperformed in the past few years. So I am also invested in ETFs focusing on other factors, such as small capitalization, emerging markets, and value. I hope to be well diversified with such a growth portfolio, which I call it my diversified growth portfolio. Given that such ETFs are by themselves well diversified into thousands of shares, I do not have an upper limit on the amount I can invest in them. My target allocation to diversified growth is about 30%. Finally, I have a small opportunistic allocation. I named it this way to make it very clear that I should not become over-enthusiastic in a market boom, and over-invest in such shares. This uncle is conservative, but still think that we should not ignore opportunistic investments. These consist of what the professionals call potential multi-baggers. It just means shares which may double or triple in prices over the longer term. I have a diversified mix of Singapore and US shares in this category, such as Airbnb for the recovery of the tourism sector. I probably won't go into too much details into this portfolio because it's rather small. My target allocation to the small opportunistic portfolio is up to 10%, so a maximum of 10%, but it should be lower most of the time. I also believe in the power of dollar cost averaging, or DCA for short, which is a strategy where you invest a fixed amount of money on a regular basis, regardless of market conditions. This helps to smooth out market volatility and ensures that you are buying stocks at various points, which can help to reduce your overall cost over time. You know, this uncle is definitely not an investment expert. Very far from it. So I won't be trying to time the market. Why try something that even the professionals have mostly failed to do? Haha. So this uncle's investment philosophy is to build up my investments by using dollar cost averaging over the long term. My current investment allocation across the three portfolios are not exactly what I targeted. This is because he started off with the focus on dividend shares, and slowly branch out to diversified growth and small opportunistic. My current allocation for dividend shares is 75% instead of targeted 60%, and my current allocation for diversified growth is 22% instead of targeted 30%. Hence, I am allocating more to invest in diversified growth every month. Opportunistic tend to be more ad hoc, depending on opportunities that come along once in a while. So the allocation here is not too certain. Okay, thanks everyone for watching. So if you are interested in building wealth and achieving financial success, please support Uncle and consider subscribing to my channel. At least give me some moral support to continue. Together, we can achieve our financial goals and create the future we want for ourselves and our families.